All right, May 19th, video 2 of 2. Okay. We're looking at Globe Life. I'm assuming it's an insurance company. So this one fell apart on earnings. Something happened here. Not earnings, whatever. Maybe they pre-announced. And now they're eating away at that candle. Doesn't make for a good starting point when they struggle for a few weeks in order to get back to 1 day's worth of losses. So yes, they might make it all the way up to 105. As long as that's your goal, okay. Next time I would encourage you to have the courage to catch the falling knife when it happens, because that would have been a bargain. Let's zoom out and see how pivotal this area has been in the past. Is this a daily? Yeah, so let's go to a weekly. All right, so you can see how this was a prior high, a 95, and then a pivot, and then another fight, and then a base, and they lost the base, and they're going back into it. In theory, anything above 95 to 108 is not a good entry point. You missed a lot of the easy rally, so you should do a deep dive and figure out if you're buying all in or buying half now, half later. That probably would be my my recommendation for this one. This company is, what do they do? I've heard of them. Hold on, wait. Yes, of course, everything I have is with them. So the earnings reaction to the moon and then back, and now they're going back into that. So I've seen this happen before, to where it's death, like they can't take it out, and if they do, it's for a second, and then they come right back down. And I've seen it be a catalyst. The one catalyst I remember was Amazon. I think 2 earnings ago it had one of these massive spikes, and then I totally remember exactly when. 1 year ago, exactly. 1 year ago. And a few weeks, because Amazon reports, and then weeks later NVDA reports. So Amazon reported and had a huge spike, and I said, what's it going to take out that spike? It took NVIDIA. NVIDIA reported in May of last year, and boom, everything went to high heaven. So look at this spike going into NVIDIA earnings, and this is Google, but Amazon did it last year. So if you take that out, Google will be in open air again. So if you trust a good report from NVIDIA reaction-wise, and you trust that the all-time highs are here to stay, I think it's a coin flip, but that is your catalyst. 182. Going long into 182, you're declaring you are a momentum buyer. It's doable, but if you're an investor, you should consider leaving some dry powder in case you're wrong. Hyatt Hotels. The hotel business is pretty creepy. I do business with them. We hold, meetings once a month, and it's just a nightmare to work with them. They're almost worse than airline. 140, easy number to pick on this guy. So in the next month, it's either at 160 or 128. It seems. You have a strong buyer at 140, lose that, you're going to go 128, 124. Meanwhile, you have the opportunity to struggle to break through 156. You get 156 out of the way, maybe you get 161, 162. Let me drill down a little bit to show you. You see the seller at 156 right there? So you can put a line here and say, okay, so this is a tough spot, and this is a tough buy. So there you go. You want to go long, right in the middle of these two, you're guessing. You want to go short, you're guessing. If you want to sell an Aaron Condor, maybe that's the best thing to do. Earnings in 73 days, so you got a long time to kill. All right. Hood. To be honest, how much of this is the freaking movie? The guy is back, Roaring Kitty or whatever. He was at the heart of the Robin Hood thing. I personally would not touch this company. For starters, they actively cheated their clients in order to feed their overlords. So that makes it a no touch from an ethical standpoint. And then look at this P&L. What is going on with this P&L? Okay, so maybe it's stabilizing a little bit, but before that, what is this? So this is where you need to do a homework. Are you investing in this company, and why? Do they have margins, and why? Look, so the COGS are not there because they don't sell anything. It's a service, and then the operating margins eats. So they're running the business the operating margins are bigger than the dollars they bring in. So they're burning something somewhere, right? So let's go see if we can find it. Let's look at the statement. You look at the income statement and you look at the annual level, and this is their sales per year. So it's not that bad, but it's not that great either. They're running at 2 billion, which is more than last year. And you look at the margins, that's the bleeding. So I want to see if they're bleeding their own money, or do they need to borrow and dilute in order to create cash. So cash from operating activity kind of gives me that idea. So it's all over the place. In 2019, they were positive, 3 billion negative in 2021 after I don't know how that happens, but anyway, the pandemic. I thought that was their best year. And then positive, and then negative, and now 1.7 billion running 12 months. I wouldn't touch this with a 10-foot pole, to be honest. There's too many questions for me to buy it at an all-time high level. In fact, that is if the markets have a hiccup, this one is extremely vulnerable. How about we say it this way? Okay, it's definitely not an obvious point, an entry point. I say that with complete confidence. The starting point. HubSpot. Look at this P&L. Wouldn't you love to see that in Robinhood, or a stock that's going into an all-time high? A P&L that is growing, at least. They're growing sales. It's not a pristine P&L, but it is growing in sales, positive cash from operations, so they can run their business, deliver this kind of growth without having to burn cash, and the stock price is doing this. So you see, like, this one would make a better spot for me. 580 needs to hold. If you lose that, you're vulnerable to 540, 530, which would make an excellent starting point. It's not bad here, but all the sellers are above. And don't take my word for it. They're right there. Okay, so here you get a good box. You can draw a box. So check this out. Here's a hard seller at whatever that number was, 645. Hard buyer at 546, 47. And you're fighting for that. And then look, you can make another one up here. And another one here. So you see how it goes in ranges? So use these two lines that we just drew here as your range. On the upper ends, it's not a good entry point. It's not an obvious entry point. Technically, you break out of 845, you're probably going to get to 690, technically. But in order to get started for it, the closer to the lower end, the better. JD, not an obvious entry point. You missed the easy work. It's got resistance, but the descent was too fast. They left a lot of holes that they could plug in quickly. I would argue that you have a candle from back here that represents where the sellers are, and it's right there. The easy work is done, and now the serious sellers are here. I think it's easier to get the 30 than it is the 38, but I wouldn't short it because I don't trade Chinese stocks anymore. Technically speaking, also you could say that the inverse head and shoulder target is somewhere down here. Let's see here. 7. Yep. This is 36 is about the perfect target for the neckline that just breached down there. So I would be in a buy the dip mode, where at 32 there's a buyer, 30, 29 there's another buyer. Anything below 29 makes for a good entry point. Johnson & Johnson, we bought the dip. I wouldn't go long here. It could extend to 158, 160. But look, when I say the easy work has been done and we went long the dip, watch this. So whenever that was, 2023 May, about a year ago. Okay, another battle over it here with all of these buyers, all of these sellers. Look how pivotal again, and we're right here again. So this zone should be resistance. And this makes a better exit than an entry. Buy the dip into the support that has been proven below here now. So now we put our money where our mouth is, and we sold the put spread on the way down. So this is support. So I would rather buy into support than into resistance. So look left, bunch of sellers, potentially. It will follow markets. So JP Morgan, I'm ready to sell a call spread in again. Vulnerable, it got, I sent out a bearish trade and I said vulnerable to 1, vulnerable to 2, and then it did this. And then I got out after the first dip because it gave us 50, 60% of the maximum gains in no time. So these two played out. So I would say vulnerable. I have no scientific, and since I don't have no scientific point, so I will delete the second one because I honestly don't know where the other sellers are. So this is JP on a shorter time frame, smaller candle. If you can say, all right, so they needed to go $28, so the target would be somewhere around 208. So if I sell a credit call spread, I will go out a month and sell it to survive the 208. So I would want to be in the 215 area. That's gives it enough room to rally. Or I can gently buy a debit put spread out in time just below current price and stop out if it doesn't work for a small loss. I could do a combination of both, credit call spread and debit put spread. It's a good bank. I'm not saying it's going out of business. This is just a price action thing. It is in an all-time high situation, so it's hard to pick. The only level I'm picking is based on the measured move from the breakout. And by the way, I said what's going on with the banks earlier. This was one of the reasons why the Dow broke out and the XLF broke out. When the XLF has been an extremely strong bidder and contributor to the breakout in these markets, which make us, I don't like it when we have financials leading the stock market. And when the stock market needed a bid to make the all-time high, the financials helped more so than the mega caps. I get it if I'm chasing the idea of growth in NVDA. I don't get it when I'm chasing the idea of growth from the banks. That means the banks are being creative, and we know what happens when they get creative. 2008 happened. So I'm just holding my breath that they didn't create something that's going to break soon. So we'll see. Lululemon, good business. Look at this P&L, and it's falling like it's going out of business. Scary situation to have. I believe we went long, or I went long, or it is a candidate to go long, but you have to stop out if you lose 330 because I don't know how low it goes. Maybe 300, 298. Okay, so I would do a credit put spread. Look, I have one in the hopper ready to go. I don't think I sent it out. I don't have any values for it. But it is a candidate to sell a credit put spread. My only concern is that it's going into earnings in 11 days. And it's doing this when the stock market cannot stop rallying, even on the back of crappy stocks. It's scary. So maybe it's a good pulse on the consumer spending too, which Walmart said no problems with that, but they're on different price spectrums. Okay, so Lulu is not cheap, Walmart is value. I wouldn't touch it going into the earnings. I would trade the earnings though. So come to me the day of the earnings so we can guess from the options what they're planning on doing. I honestly don't know what this company does. Sounds like an investment company. Very violent stock at lower lows and lower highs. So I would use rallies to get out. And I would say there's a seller lurking into 90, which is this candle here. And in fact, this candle here is telling, 93, I would be out completely. Anything around 93. It's a huge battle. And there's nothing that stops it from going to 82 and 78. And if you lose 77, forget about it. Don't know anything about the company. Don't know if they have the oomph to fill the gap. But this gap is not easy to fill. It's not a regular gap. LYFT, not a big fan. You have buyers into 1550. If you lose that buyer, you go to 1320. And you have sellers anywhere above 18. That's what the chart says. The fundamentals is up to you. Oh, look at that. Okay, so I said higher lows, lower highs coming into a point, and that point's still there. Mind you, so this is now like this. I can't twist it, but I would if I could. So same concept. They're stuck right in the middle. And look left, that's a big pivotal zone. And that same comment, you lose 1550, you come down to this bottom end, and you have sellers all over the place. So not impressive to buy. Longs in. and again, it's got the market's help. What else do you need in order to go out? Macy's earnings in 2 days. I don't know why you submit that. It's a coin flip reaction. The earnings, we don't know what they're going to say or how people will react. Even if you think Macy's P&L is going to be pristine, we don't know how they're going to react to these earnings. You should believe that by now. Some of you do, but most of you don't. I promise you that if the CEO of Macy's sends you an email and say, this is our P&L the day before the earnings, you would be guessing into the reaction. Just look at SMCI recently. They beat and raised and grew 200% and the stock fell. The knee-jerk reaction was down because it's based on the expectations. If they delivered a great report, maybe they believed they wanted an awesome, super duper great report, and vice versa. The Tesla report was horrific. They shrunk in sales one of 2 times ever, I think. And people celebrated. Why? Because the expectations from the media was, oh my gosh, it's going to zero and the guy is crazy. And then he delivers a okay report. It was bad. It wasn't super crappy. It was just crappy, regular crap. So we don't know what people expect here. I can tell you technically above 20.4, you can get to 21.4, another dollar basically. And you can fall into support around 18. And if you lose 18, you're probably going to 17. So again, come to me before the earnings. The day of the earnings, we might read the options, get clues. This red W says it can go to 18.20. Mara. I would avoid, if I'm stuck long a Bitcoin stock and I've gotten a relief rally, I would use it to exit. I would rather trade crypto. So Mara above 21 can get another $2 to $3 technically, and you have buyers below 17 and you're right in the middle. So if you get to 24 and you're buried in it, I would suggest selling hardcore covered calls or exiting. I prefer trading the actual. Is this a crypto company? I think so. Yeah. So I would I would prefer trading the crypto itself. That's all there is to it. It's fewer variables to worry about. With this one, you have to worry about crypto variables, market variables, and Mara variables. With crypto, you just worry about crypto variables. With Apple, you worry about Apple and market variables. No price. This one depends on the price of a commodity or an asset that is so volatile and you can't control it. So Meta. All right, so this is a company that needs no introduction, and they have an excellent business going on right now, and they're working on building a business that doesn't exist, and everybody's okay with it. So my only concern is it was leading the market, and those white circles, they're right above us. One more time. You see, I drew these white circles, and look how pivotal they are now. They failed at them. What's it going to take for Meta to come back to 508, where it has a bigger seller at 508? So let's say the markets have a blowout. Again, another record week. This one should break out from 481, 82, that prior fail. And if it does, it could get to 508 and then repeat the same struggles. You have a lot of buyers below, huge from the earnings reaction, and a lot of buyers above, sellers above. And by the way, this earnings report was not bad at all. But look at the reaction. It's all about expectations. All right, so Meta is a good investment for the long term, but obvious entry point, you have sellers above, buyers below. Short term, you have no clues. Money Lion, I think that's like a cash company. So anything above 86, you have open air, and you have sellers from here to 86. So that's the battle now. You do have buyers below. So the bulls are mounting an assault to try to make a higher high. If you're a momentum buyer and you're long that, I see what you're doing. I would rather buy the dip into anywhere below 71. Mosaic, they're selling rallies. All these comments are still solid. The turquoise line that goes across horizontally is still your pivot. You have sellers above, buyers below. Hence the R letters up there. And what you want to be aware of, that the curl, I call it the curl, this guy. What is that? They're selling rallies. Rally sold lower low. See here, the blue curl, and this is the white curl. At some point, they stop curling, and the flush on earnings may have been it. So anything below 29.20 may be solid support, and that's the case. Then if you're long here, your battle is you just want to overcome the letter R, and you want to be above 32. So I think it makes sense. We're going to need their products and services. The more people we have on Earth, we're going to need super growing things, soil and such. This is the opportunity there. So I don't fault you to be long. You should just know that it looks like almost exactly the same seller profile as a buyer profile. So a lot of guesswork. Everything I said about JP applies here. What is that white line? Oh, interesting. Never mind. Nope. That's a different scenario. I'm glad I zoomed out. So Morgan Stanley. If you look left and you say, let's ask these people how they liked buying the stock here or these people back there. So that's February 2022. When was this? February 2023. And this is May of this year. So it seems like this is not a good starting point. Literally, that's what the chart is saying. It is a breakout. And the breakout from 94 probably is targeting 112. So to short it, if you're shorting it, I see why. And make sure that you're aware of the upside potential of this inverse head and shoulders here. If you're looking to go long, buy the dip into 94. That would be the technically prudent way of going long it. Especially that we had the most aggressive rally I've seen in a long time in the market unfold from PPI. The PPI reaction, which is what you're seeing here where I started measuring, that brought it down to 85, was pretty violent on no logic whatsoever. The PPI was bad, yet the markets took off. And then the CPI was not good. It just wasn't bad. And the market built on top of it. So we have a lot of fast profits, and they may want to take half of it back. That's why I'm saying if I'm looking to go long MS, I would rather buy the dip into 896 at least. If I'm an investor, most definitely not a starting point. If I'm a trader, I get it. Microsoft. It's one of those stocks that I've been focused on for the last couple of weeks, but not a lot of people are listening to the message. It has so much upside potential, and it needed to get above 418, and it did, but it took a struggle. So let's see if it holds it and it takes out 426 this week. There's nothing stopping Microsoft. It's got the best business proposition. It is the most valuable company on the planet. That's a fact, not my opinion. P&L is, look at it. It's fake. So good. Like that other company, AVGO. A little more stable on this one. And it's a little bit more diverse. But so now I'm telling you, okay, two major concepts. What will it take to lose 388? And what will happen once we lose 388? And this is a bigger conversation than Microsoft. It has so many buyers between here and 388. But let's say we wake up, something major has changed in the world, and we lose 388. What does that say about the market? That's the big picture. Meanwhile, we have 1 million buyers. So any dips will be bought. But why isn't it at an all-time high already when crappier companies are? So this is extra buyers to launch the indices higher. That's what I'm saying. The indices are an all-time high. They are vulnerable, but I respect the target. Remember the target on the SPY, 530 to 560. And we're just touching 530. So we reached the first area of the target, and we can go to 543 in no time. And if we wanted to do that, these are the tickers that will take us there, because it's almost like they're sitting. And if crappy stocks are rallying, these will definitely explode. They have the opportunity to explode higher. Apple, this one, Alphabet. You remember that one tick in Alphabet? Amazon, of course. So ask yourself, why is this not in an all-time high? So I wouldn't short it. It's easier to short the indices than these particular stocks. So I'm watching it intently to see 426. Look at how many selling areas that there were in 426 or higher. And today, this last week, it's almost like they went there and it's like, okay, we know we can do it. Let's just back off a little bit and wait for the right time when the market needs our help, and boom, explode. This happens, folks, on a short-term basis, but let's see how they do it here. Oh, okay. So that's right. Ragu is reminding me. So they do have a builders conference this week, and it will move AMD and NVIDIA like they need any moving this week. And we have NVIDIA earnings this week. So those are 2 points that I need to remember to talk about. But if you know about that headline, it's built into the price. Collaboration between AMD and unless it's a best kept secret. MSTR, the comments like Mara, if I'm buried in MSTR with this rally, I would sell aggressive covered calls. I know you know who I'm talking about. I spoke to one of you who's long a lot of shares. So there's so much money to be made from covered calls in this one to make your position so much more stronger. 1360 matters, 1320 matters. So if it dips into 1320 from a trading perspective, it's an opportunity to go long. Just think about what happens if crypto corrects 30 to 50%, and it does that often. Okay, so what am I saying? There is an opportunity in some future, not too long from now, that you can buy this under 1,000, just as it could be over 2,000. So yes, the upside potential is there. You can't say the same about Microsoft. Microsoft has a bottom through its own fundamentals. This one does not. It's completely tied to a very volatile asset that can shrink and grow 50% and 100% in no time. And so that's a little scary. And in fact, a lot of people argue with the fact that it holds a lot of Bitcoin on its books. The Bitcoin valuation inside the company is almost twice as much as the spot price of Bitcoin itself outside. So the argument is, why would you bother? And that's my point. I would rather be involved in the crypto coin itself that they're trading over. Now, it has revenues based on some data. So it has a revenue from something else. So covered calls sold, yes. Getting long, this is a target zone on the breakout from 1330, 1350. Target zone, 1640. And there's a lot of sellers there. It's vulnerable to come down to 1320 and 1280 and 1270. Netflix, it's almost the same concept chart-wise to Microsoft. Okay, not the same fundamentals, although these fundamentals, it's growing into a nice company. Apple should have bought them long time ago. Not an obvious entry point. This reaction from the earnings, the high tick right there, is a problem. Cluster of tails. That's all I can say. What is that? Tails are sellers. So shortable. So if somebody's buying a put here or a put spread or selling a call or a call spread, I get it. It has an earnings reaction, the big blue rectangle. The red rectangle shows a lot of seller area. And all these yellow rectangles below are open candles. So think of them as gaps, weakness in the chart. Any loss of 605 will probably bring 575 pretty quickly, 565. That lowest one might take a long time to unfold. So investment, the tradable, yes. Okay, and it's a good company, so it's no longer tied to, oh, how many people did they sign up anymore. It's actually a good company. ServiceNow, a good buy the dip company at any point in time. So I would relegate myself to buy the dip into 720. You have a lot of sellers above 780. Look left. All of these peaks are sellers. And if you take out 770, maybe you get enough to get 810 or 820. But you need to be above 785 in order to negate that red W. The red W says there's a good chance you're going to be below 730 in the next few weeks. Okay, so if I were to say, put a picture and not say anything, I would say vulnerable. And that's about it. Not shortable, vulnerable. So if I'm looking to go long, I should know that I may face some sellers right away. And the secondary part would be here. And that's just target 1. Target 2 is down here. But let's talk about target 1 first in this environment. Plus, this one is a buyer zone, like where they broke out from. Okay, and this is vulnerable until they get out of this zone area. These candles right there. So I'm going to put it somewhere around here. 785, 86. Okay. NVIDIA, no need to say anything. The company is amazing. The growth is unbelievable. And in 3 days, they report earnings. So take the best shiny coin you have in your desk, shine it up, and flip it 2 to 3 times and take the average of that, and you'll be good to go. Maybe it's at 1100, maybe it's at 740. That's how much pain and love there is in this one. There are some people that are short from way, way, way lower levels, and they haven't given up on it. I don't understand why they're short. It's literally changed this financial statement like you wouldn't believe. And there are some people that are super exuberant that I think it's going to be awesome to watch. That's all I have to say. And it will take the market with it. NVIDIA is the market for a whole year. What NVIDIA does, the market will do. NVIDIA drops 10%, the market will have a 10% correction to ensue. Because if it drops 10%, it means it said some pretty scary stuff based on like the most of the growth, that shock growth that we saw, that was it. That would be the message that would drop it like 10%. In 2 days, in 3 days, come into the live room. It's going to be fun. We're going to be watching it. And we're going to look at the options and see maybe they give us good clues. Okay. And how to trade it. I don't know if I would invest in it up here. If I'm invested in it, I would sell covered calls. It's a great company. And if I load up all in, it's a fantastic trade or a big loser. So it's a gamble, and it's a gamble of the year, I think, for the whole market as well. So how about I say this? If I have a lot of bearish positions in the market, I would go long the S&P or the QQQ over the NVIDIA earnings. That would be a hedge, because I would lose my money on those if I was wrong and NVIDIA falls. But if it doesn't fall, it's exploding higher, and it might take my bearish overall position into hell. So don't want that. You want to hedge your positions. Protect, because it will make you or break you. NXPI, decent P&L. This is where, it's not as pristine as NVIDIA, and it's doing better than NVIDIA. It's kind of strange. But once they broke out from the 250 area, the whole zone becomes supportive. So even if this one has a bad day, it's going to fall into like 5 or 6%, 10%, and have a lot of buyers. So if you can think halfway of this stick that you see here, the red line area, solid buyers. So if you're long and you can take that much pain, you don't need to look at it. And if you're loading up long all in, I would leave room to add some down here. So let's say I wanted to buy 100 shares, I would buy 50, 40, and then double up if it goes into below 245. Okay. On very popular shoes. I have a couple pairs. Expensive. I don't particularly think they look great. It's just comfortable. They're comfortable and people love them. So that's a double one. Usually comfortable shoes are ugly, but these are not ugly. So not an obvious starting point because of this and that. It just doesn't make it look like it's an obvious starting point. The P&L is awesome. So somebody invested in it and they're in it for the long term. You don't need to look at the chart. You're just in it. And if you're looking to go long, there might be better entry points. They just reported earnings and the reaction was positive. Give them some rope to see how they do against 40 or in 41. So if you missed it all the way to 38, where's the rush to buy it now? But I'm in it for the long term, Nick. But it's exactly my point. If you're in it for the long term, why wouldn't you wait to see if you can get it at 32 versus 38? At least take half and leave half to add at, say, 26. What? 26 will never be there. Yeah, it was there like a couple months ago. It will be there again. Open. Decent support, fell into support. That would be a good starting zone. So if you went long inside this $2 zone, good job. I don't like stocks that are under $5. This will probably reverse split soon, so it looks like it's the legitimate company. I just don't like that. Look at this P&L. Huge peak into the pandemic, and then out of it, nothing. So scary. I mean, what? Yeah, not for me. So this is, I think, the open house, right, for real estate. Yeah. If people... Yeah, I would not touch this for myself, but it has proven itself holding the $2 level technically. The P&L is scary as hell. So if I'm long, let's say I invested in this company at 4 and I invested the entire amount that I was going to invest in, I would not add down here. It's tradable though. It does trade well. Above 2.7, you might get to 2.9 or 3, but it's better to buy the dip into 225 or 2 from a technical perspective. So Oxy, you see those white boxes? Remember when we spoke earlier? I said when a company goes from point A to point B, consolidates, and then goes above the consolidation and continues as much as where it came from in a couple of videos ago? Well, this is the opposite. It fell from point A to point B, it consolidated for weeks, and now it's below the consolidation. So I'm saying is if it's not at 64.5 or higher, or 65 or higher, it's probably going to test 62 one more time. And if it loses that, you're going to probably get 60. So not a good thing to have. A bunch of sellers above and no earnings to come anytime soon, unless a miracle happens. I think this one drifts lower. And they're doing lower lows and lower highs, and 62 is not a guaranteed that they will hold. It's a good candle. Look left. There's another 62 on March 18th, almost to the penny. And below that, 61.50, a couple of weeks before that, early March, sorry. Look at them, tabletops. So if you were to add more lines to my white lines, I'm going to say this is an important spot from back there, and so is this one. So you have buyers down here still, but you could still get to 60. So not an obvious point of entry. PDD, just like this one, is not an obvious point of entry. Look left. Just ask these people, hey, was it good to buy the stock up here? They'll probably say, no, not so much. So you should just wait to see what happens out of that one. And earnings in 3 days. Most definitely not anything I would touch. The P&L is fine. I always thought that this was Pinduoduo, but I think that company is gone. So now it's PDD was taken over by somebody else. And this P&L is solid, so I have nothing against it. But technically, I don't like to go long stock that has failed here and here. Yeah. But like I said, consolidation zone, if they break out from it, they can get to be 180. So tradable to the upside, like these guys. They failed, but they bought the dip. If you buy the dip, you can make it. So you should have bought this dip into support. And if it happens again, that's the trade. When they fall into support, go long. Have the courage if you know this company. The next dip to 132 or lower would be interesting. Pfizer. Okay, so the easy bounce happened quite a few times. In late 2023, in March, and now I would argue that there's a seller lurking at 30 and 31. So the closer it gets there, the less attractive it becomes. So again, buy the next dip in Pfizer. That's the strategy. And if I extend this white box, you can tell that this was a zone that was trying to consolidate and they failed. Lower lows, lower highs, lower lows, lower highs, and now they're stabilizing. So maybe they're building a base. You can be long if you're in it for the long term. I get it. If your horizon is years, or if you're shorter term than long term horizon, I would make it a trade and buy the dip or sell a put to be long on a bad day. A reputable company. I mean, respectable company from the earnings power and the P&L thing. I don't know exactly their fundamentals these days. Palantir, I was right. As good a company as it was, I wouldn't touch it above 25 from a trading perspective. Look left. And if you bought the dip like we did, you're making money. I sold a put spread or sold a put or bought a call or buy shares, you're making money. Now, I'm going to raise the alarm. If it loses 20, it's probably going to 17. So if I made money because it was a trade, I would close my position. But if I'm in it because I'm invested for the long term, then I did right. I have one position, and on the next dip, I will add to my position where if I'm an investor and I bought shares, I wouldn't add until it goes to 15. If it goes to 15, will it? Yes. I'm confident it will. When? I have no idea. If the market's correct, let's say we have a huge war breakout next week and the market's correct 15, 20%. This one you don't think will go to $15? It will go to 12. But I wouldn't buy a put for that. I like the company. I'm optimistic about the management and the business they're in. It's an old company. It's like 11, 12 years old. All right. Now we go to video number 3.